Yeah, looks like it's working, Paul.
Oh, brilliant. Brilliant. Um, let's, that's really interesting, Julian, because I can hear you and you're not on the panelist list. So I'm not quite sure how I can hear you, but I'll move you over.
Okay, you're coming through loud and clear, so if you can hear me and I can hear you, then that sounds quite a good thing. Judging by the reaction of people, it sounds like we're good to go.
Hi, everyone, and welcome to Trader Talk Radio, the original show market analyst for Sunday night, the 15th of March, 2020. Good to have your company. An insane market over the last couple of weeks. Lots to talk about. A reasonably exciting time. And as you may have heard on the cross, I don't know how, but I have audio from Julian without seeing him in the webinar, which is causing me a few issues I'm trying to sort out in the background. In the meantime, I'll get the team to wander around and say a quick hello and let us know how they're going. Ash, how's your week been?
Do you know what? It's been it's been pretty tough to be fair, but I feel pretty good about it. I've managed it pretty well. There's been a few opportunities. There was one that popped up actually on Friday, but unfortunately not in something which everybody can trade, because it's just not on offer from the brokers. But I've actually switched to individual stocks now, and it's proving to be a much better way to actually approach this market.
Nice, mate. Jeff, how you doing?
Oh, g'day, mate. Yeah, going well. I hope you can hear me. I've got a microphone issue, but if you can hear me, that's well and good.
Look, I can hear both you and Ash a little bit light, but not too bad.
Okay, I'll speak into the microphone as much as I possibly can, but I think I've got the wrong microphone attached somehow. Anyway, the week has yeah, well, the week's been crazy, hasn't it? At the end of the day, I think my main claim to fame was getting out of the Euro long when I did, and taking a fair chunk out, well, 99% pretty much of that rally, and missing it on the way back, which has really peeved me off. But you know, you got to be in the right place at the right time, I suppose.
Yeah, mate. When you're, when you're banking money and being upset, life is not the worst thing can ever be to you, mate. You can have times as a trader which are worse than that. I know it's, it's one thing Jet used to tell me on the trading floor a lot in London, that our job is to, some trades win and some trades lose, and you can't really control that. But our job's to get them, not to miss them.
Yeah, as I said, got to be in the right place at the right time sometimes.
Great to have so many in the room. Julian, how about you? How's your week been?
Well, Paul, I've been, as you know, but your listeners might not know, I've been on holiday in Adelaide this week. So I've been dodging coronavirus and restrictions, and just landed back in New Zealand about 2 hours ago. So for my holiday sunbed, not quite, because we were driving the coast road, which is spectacular. The markets have been unbelievable. Obviously completely crazy. This is historic stuff, right? I'm not ever going to use the word unprecedented. I never do in financial markets, but historic markets. These things don't happen very often. They come our way about once every 10 to 15 years. And the trick here, if there is a trick at all, is keeping your capital, making sure that the decisions you're making are on process, and making sure that you're just able to handle the relatively extreme levels of volatility with your stop losses. So, I'm sure that we've had some listeners who have had good weeks, and some that have had crazy weeks, and some that have had quite bad weeks. And all of those things combined, really, providing you're doing the right thing and sticking to the process, as you were talking about just now, Paul. I think in the medium term, it gives you the confidence you need to make money, and volatility starts to settle down from crazy to more reasonable levels. I've never seen markets traders like this for such a long period of time. I think we've been talking about low volatility in the foreign exchange market for weeks and weeks and weeks, and boy oh boy, has that come round now. So for me, I think I've had a couple of rough days on foreign exchange, but they'd be more than made up for with the shorts I've been taking in gold. And I do believe I made $3 out of oil the other day, but I don't remember when that was. That might have been late last week or early this week. I can't remember anymore these days.
And how much did your gold trade make?
I think we made $100 and something on the gold trade on one of the positions. So that sort of worked out quite well.
So, gold really should be a cent a pip. So that would be 10,000 pips.
Probably quite a lot. Yeah.
We calculate that on your record as 10 cents a pip, just to make sure it doesn't dominate your record. But even that's 1,000 pips. Not a bad effort, Julian.
Yeah, obviously, I've been nervous about gold, and I've been talking about it for a long period of time, right? But equally, when the stock market falls apart, people normally go to the safe assets. Gold was being a safe asset that worked initially, but then hasn't worked at all, right? And now we've seen it come back more in line with the commercial positions. But what this does is give us present us with heaps of opportunities we got across all markets right now. There's loads of opportunities, Paul, and quite frankly, some of the places where the foreign exchange rates have gone are completely and utterly nuts. So there's some, I think the next 2 or 3 weeks is going to be the return to normality of some description. I don't think it's going to be easy. And there'll be lots of spikes and bits and pieces going on everywhere. But I think there's some really interesting FX crosses that are going to be hold my attention really closely over the next 2 weeks.
Look, I'm going to jump in. We're going to start a bit differently. We've just come out of another call, talked a little bit about a few other things as far as trading goes. I might open up by just having you guys. I'm going to give you guys a chance to talk in depth about markets, like we always do a little bit later on. What I'm interested in and what you think is going to happen Monday, Tuesday, and what you're looking for. We were talking earlier, for instance. I was saying I think the Kiwi will gap down on the. For those that don't know, Julie and I both had to get home today. Because if we got home after midnight, we were going to be in self-isolation for 2 weeks. There's no way into New Zealand after that without doing self-isolation. And I think the New Zealand dollar will gap down on that, and which is, why you don't hold positions over weekends in these kind of markets. These things are often done on weekends. And we were talking about, big stimulus package coming on Tuesday. How would you play the Kiwi this week, Julian?
Yeah, look, Paul, I think the two key things are the Aussie Kiwi cross rate is the key one for me. Against the dollar, I think it's much harder because the US dollar has been rallying really hard against pretty much every currency recently. The euro is almost a standout because it hasn't rallied that hard against it, but against the Aussie and against sterling and against some of the other ones, it's been an amazing rally. Look at the Mexican peso or the Canadian dollar and see what's been going on there. We may see that start to reverse, but it's only going to reverse when the Fed puts another $1 trillion or $2 trillion into this market. Right now, the worldwide shortage of dollars has come home to roost with a vengeance. So what we're seeing here is it's really hard to call the bottom in the Kiwi or the Aussie dollar. Fair play to Jeff, by the way. His bearish outlook on the Aussie dollar has certainly proved profitable this week. But I'm looking at that Aussie Kiwi exchange rate because that's been coming down, getting closer and closer to even or to parity. I think that's a key number. I don't think we're going to spend much time at parity. There must be a lot of one-touch options out there that are going to get triggered. And so any opportunity to spike that market down on Monday, Tuesday, I think could be really interesting. It might come Monday, it might come Tuesday. I don't know why the Kiwi should perform better than the Aussie, but who knows? That's been the trend recently, and I've no idea why that's actually going on. But I think that there's a chance we could see that below parity very briefly next week, and I think that's an opportunity. I think to look at the market. Try not to be the first buyer, but there is a point where you say, well, this is just nuts, and we're getting close to that. This is just nuts moment. So
below parity. So I guess that means that technically they're potentially we're looking for this to gap down, and potentially there are two trades people can consider this. There's the trade to parity or 100, 1.0000, and if it gets below that, we can look for the buy and see whether we're going to start to establish a leg up here. And this has been a big sell already. If we get down to parity, we'll have come off 500 odd pips to get there. And the chance of at least a decent bounce there, no matter what's going to go, I think it's likely to bounce there.
Exactly, yeah.
Look, we're going to talk about, I might try and talk about this later on. I was going to talk about support and resistance and in and outside of news and how they work for me, but we'll see if we can get later on. So how about you, Ash? Monday morning, what are you looking for? You're into individual stocks at the moment?
Yes, I think that's the play. Personally, I think just for the record, I think this is probably going to be the most difficult week. And the reason I say that is that I think we're getting to the point where a lot of the news has probably been disclosed. I think there's probably less and less shocks coming. I think that the big shocks we've probably had, and the stimulus packages have started to come into play. And the more and more stimulus packages that come into play will probably start to maybe support the market at certain levels. But I don't think those support levels will necessarily be the area that will see the bottom. Just with a V-shaped bounce. I think that there's certainly some double bottoms that we need to see minimum before we start to get a little bit more confident. But I think this is a really difficult week. I think we need to see this week unfold because, as I say, as the clarity, as the mist starts to clear. I'm not saying that it's cleared, but I think the mist will start to clear fairly soon because the governments are starting to take probably the most extreme action. Donald Trump has obviously now banned flights also from the UK, which is going to hammer the travel stocks in the UK, where companies like Virgin Atlantic and British Airways were probably fairly comfortable and maybe kind of confident that the business that was going to be lost by the European airlines was going to get picked up by the UK airlines. That has now gone. So they are going to be waiting for their own stimulus package to make sure that they can stay solvent. Yes, mate.
So Monday morning, Tuesday morning, what kind of actions are we looking for?
I mean, I would still think that we're looking for a sell-off in the indices, but as I say, I think the opportunities actually start to lie in single stocks. I managed to get a trade on Friday with a company called Ocado, which is a food delivery company. And as the panic kind of sets in, and people not only are asked to not have mass gatherings, but put themselves into their own lockdown, then I think companies that provide people the opportunity to pretty much isolate themselves will do fairly well, comparatively speaking. Now, whether they actually become a buying opportunity, so they soar to the upside, I think the hedge against the indice is probably the play, and I would be looking for companies like, as I say, Ocado. I even think Sky might be a pretty good play in this environment as well. Where we kind of look at people probably spending their evenings and days inside, then they'll probably be starting to turn to entertainment companies, possibly even companies like EA and gaming companies could also do fairly well out of this environment. But before we came on the show, we were talking about banks, and I can see that, and I've actually got some ideas of stocks that will probably do well, but when things clear up a bit, I think for the near term, we should be looking for companies that probably do allow people to pretty much keep their own personal space. So yeah.
Got a couple of thoughts on that. We'll get to Jeff, and I'm pretty keen to hear what action he's looking to take early in the week. A couple of interesting things from Justin earlier on in the conversation we had with him. US dollar short, and US dollar short does interest me because we'll get into that in a second, actually. Be interesting to see if Sky can hold up if all the sport gets cancelled.
That's a really good point, mate, and that's the big thing that was it's a bit of a red flag. But Sky,
HSBC for Justin in Hong Kong, talking about it yielding 9% on dividend. I think people are going to start looking for some decent dividend plays, aren't they? I mean, this is a different kind of market. I know we're a long way from Forex at this stage, but these are all things that will come into play as we go through. I'm going to come back to you guys and give you a chance for some longer crosses, but just keen to see if I can move along a little bit. Jeff, what are you looking to do early in the week?
Mate, I'm looking for any cross that I can find to hit a support or resistance level. I think you were just speaking about that earlier. I think with all of these massive moves in the market, eventually, and of course they're emotively driven, fear-driven, panic-driven, whatever you want to call it, I think eventually they'll come to a level where everyone says, "Oh, fair value. Let's correct this," or whatever the case may be, overbought, oversold. So I'm looking at a mystery bag in terms of what and where. But if I see strong levels approached and maybe even beaten, then I'll be looking to trade them back in the other direction. So I don't really care what cross that is, because I think there's so much uncertainty and so much, certainly in my book, I've got no idea what's going where. I've got to be absolutely honest with you in terms of a directional bias. I've got no idea. So I'm just going to look at the charts, probably on the bigger picture timeframes, monthly chart, weekly chart. And if I see support and resistance that is long-term being approached or even beaten, then I'll look to trade it back in the opposite direction. But anything I trade, I think, will be fairly light in terms of risk.
Can I make one point,
when we come back to you, Jeff? I'll get to you in a second. We'll come back second. When we come to you later on, Jeff, can you remind me? I want to talk about support and resistance and how I think it works in this kind of. Actually, I think it works full stop. And I'd like to do a bit of a chat on that when we get there. I'm keen to keep moving things along. So
Sure.
Let's go back to Ash.
Yeah, I just want to make one point. When I my first statement about it being a difficult week, the reason I'm saying that is because my thoughts on this week is that the trend to the downside will probably hit a little bit of a few breaks. Now, I'm not saying that we don't go down initially, but actually this week, I wouldn't be surprised at all if we actually start hitting some ranges. Now, those ranges are probably going to be still pretty wide, but I think selling low buying low and selling high as things settle down, maybe from Tuesday, Wednesday onwards, may well be the strategy this week. Rather than playing the absolute trend in one direction, my thought on this week is that we probably start to settle down a bit and actually start to hit a bit of a range.
Yeah, you'd expect to see some along the line, and we're starting to talk about you're going to expect in any move down to see some pretty decent bounces at some point. There must be some bounces around, but I've got a different question. I'm going to put this one straight to Julian, because we were talking about this earlier and Justin led this, but he was saying massive US dollar stimulus coming, US dollar weakness coming. Surely the biggest risk to these markets right now is massive US dollar stimulus followed by massive contagion in the US. Then we're not stopping here.
Yeah.
Any thoughts, Julian?
Yeah, look, Paul, I think I'm going to reiterate the Winston Churchill quote I used earlier, which is that in general, when you look at Americans, what they tend to do is the wrong thing, and they keep trying to do the wrong thing until they finally get their act together and do the right thing. They're actually reasonably predictable in that sense, and I think that's been a playbook that if you look at what's been going on, that's pretty much the direction that they've been heading in over the course of this whole virus thing. They've been in denial for quite some time, and now I feel that the machines are in motion and they're moving things as quick as they can, both at the state and also now the federal level. So the relief that's coming from either a fiscal point of view or a monetary point of view is enormous. We all throw billions around these days like they're nothing, but actually what seems to me, I know they've announced this 10, 20, 50, 60, 80 billion dollar worth of relief. It'll be much bigger than that, and the Fed will be there for another 500 or 600. There's going to be a substantial amount of money coming in, but make no bones about this, right? The world is still short of US dollars, so it needs a lot more than they're prepared to at this stage give. The worse the contagion gets, the more the Fed will pump liquidity into the system to ensure that it's going to be okay, and the more the federal government will spend in some kind of, those of you who remember the GFC TARP or TALF deal, that'll be enormous, right? And they'll put
bumpy for you if we get contagion of the disease. Sorry, for you, if we get widespread of the disease in the US, we'll just see more and more stimulus from the US government. So Correct. We'll see it bang down and bang back up on the relief offered at some point to stimulate the economy.
The volatility is going to be enormous, right? And the question is, we all believe that probably the testing hasn't been very good so far, and they're probably going to do more of that. And they'll discover more cases purely because they're actually now finally testing people and not charging them for the privilege as well too, in some weirdly American health system way. So I think the key thing for me is the implications over the short term, over the medium term rather than the short term. Yeah, we're going to get volatility. And Ash is right. This is not going to be easy for the next couple of weeks. I've got some cycle lows in the stock market around the middle of April. That's going to be an interesting time, I think, for seeing where the market sits then as a potential period of time for a bounce. And
And
you know,
this is
that's
going to be
entirely dependent on what's going on. But that also sort of makes sense because we're sort of seeing if this thing's going to peak, it'll peak about May, but it'll be that rate of growth which should start to slow. And I think that'll be the turning point for me will be the rate of growth starting to slow a little bit. I think that'll be the major area.
And that's all the, you know, and the big boy investors, all the talk in the next 2 months is going to be where we're going to buy. They've done a lot of selling. Unless they get panicked, unless there is big contagion in the US and we get, you know, if we get 10, 15,000 infected in the US, all bets are off for mine. But other than that, people are trying to, everyone I speak to at the moment is talking about where they're going to buy.
Yeah, and I think they will, and I think they will buy, and we'll have days when the market's going to rally heaps. But this market isn't done yet, and I still think it's way too early to make those calls. But you know, who knows? I could be completely wrong.
Look,
so for me, Paul, the key thing is the medium term, right? Because I'm much more concerned about what this means from all the governments in G20.
If you're in this market, guys, and you're new to it, remember that your job is not to lead the way, and that if you're going to buy this, technically you need a double bottom or high low, and when you get that, you can buy. And until you get that on a meaningful time frame, not a 15-minute chart, you know, you get up to a 4-hour daily chart, you get a double bottom or high low, and you can start to look to buy this. But until you get that, you know, I think you need to be pretty careful. Look, I'm going to come and get a bit more depth from each of you. I want to talk about horizontal levels when we get to Jeff later on. We're going to go Ash because he's early morning in the UK, then Julian because he's been on holiday, needs to get some sleep, then Jeff. A bit more detail, Ash. What do you got for us?
Okay, let's have a look at the charts. Oh, I can't share just yet. If you could stop sharing a minute.
I need to stop sharing. Yep. You
do. Yep. Be great. Okay. Let's bring in this. That's what we want. Okay, so this is what's been going on. This is the FTSE 100 right now, and we did bounce off this level here. I mean, you know, you can pick levels all the way down that that you could expect to bounce, but they just haven't held up. But we did get a bounce on Friday. And as Julian mentioned earlier, you know, that is probably something to do with some options expiry more than anything else. And I am looking for this to come right back down again. Now it's possible. This is really what I'm looking for, to see whether we can actually start to figure out where the range is. Now this is a fairly, you know, look at this on an hourly chart, and it's an okay bottoming pattern. We do see an inverted head and shoulders here. But I would be looking for the market again to look for some downside, and the main reason really is because the Trump travel ban on the UK is highly likely to drive those travel stocks back to the downside. But if it comes back down to this point, this is the area that I'm interested in. You know, at these lows, you know, on the range at the lows, I'm interested to see whether it holds here, and whether it can actually grab its way back to the upside. Now, if the market on Monday morning is fairly stable at this level, then I'll be looking for the short straight away. I'll be looking for it to come down. I'll be looking for it to come down to touch this bottom level. But after it's come back down to this point, I will be really interested to hear the news, and I'll be interested to hear whether there is any addition to anything else that's going to happen, which could be either positive or negative, but mainly negative, I suppose, because if there's further negativity, you know, there's another big shock, then we're probably going straight through this level down to the next one. But if there's nothing else, and you know, and we get the reaction on Monday after the Donald Trump announcement, and it holds at this particular point, then I'll be looking for upside. But I'll be looking for upside to this point. One of the mistakes that I made on Friday is that I was long on the stocks on Friday, and I had a pretty nice profit in the bank. But because I'm looking for this market to bounce, you know, pretty heavy, and it did bounce fairly well, to be fair. But I'm trying to see whether actually we do get some significant upside to come and test some levels, you know, to come and say some genuine levels on some longer term timeframes. I held on to positions and moved stops to break even and got caught out on a break even rather than taking profit. But I don't think that's the play anymore. You know, I actually think now a better way to do it is to look at the 4-hour, look at the hourly, try and get a definition of some ranges on the go. And when you try to hit the low of the range, buy it up and when you hit the high of the range, close out the position and maybe go in the opposite direction again. So I'm looking for a little bit of bouncing around here if I can get it next week. As we approach the Fed announcement, things could change, but I would say, you know, certainly the early part of the week, then I'd be looking for the market just to kind of hit this range and see what can happen from here. But obviously, the real idea is to try and buy something down here, take profit at the highs while leaving something minuscule on the table, because if it can go through, then a low end trade is going to be in the market, and then it's just about adding those minuscule amounts back to the upside and trying to make the trade safe. You know, if we can get a minuscule amount that pops up from here, getting stops to a point which will cover the next trade and cover the next trade and cover the next trade will be the play for me. That's what I'll be attempting to do into next week.
Cheers, mate. Sounds pretty clear. Anything else from you?
No, not really. I mean, people don't have the opportunity to, unfortunately, to buy stocks from these particular brokers. But I would certainly, you know, on a personal note, that is something that I'll be doing. The other stock that I really like right now is Netflix. I think that would be another pretty decent play right now. Something like Netflix.
That stuff. Everybody's talking Netflix because people are quarantined or stay home and watch the movies. One of the things I really like Lloyd for, he always finds the next thing. So when everyone's looking at Netflix, he finds the thing that'll move off Netflix when Netflix moves. So he doesn't quite sit with the team. I wouldn't mind trying to work out what the next thing is. When Netflix goes, what else goes as well, and see if we can find a way into that. Mate, you're talking about taking individual stocks. For guys in Singapore, you know, they can do that through IG Markets, can't they, if they want to? Who do you do it through?
I've got a couple of brokers. So CMC is the better choice. The spreads are pretty nice with those guys. Yeah, they've got just about every stock that you can imagine that they have going, and you know, it's pretty good. The charts are awful, so you can't really bring up a chart and analyze it. But so the charting software is bad, so you have to use other charting software if you're going to analyze the stocks. But for actually using them as a broker, CMC is really good.
Can you get the stocks on? Can you get the charts on TradingView?
Probably. I've never used TradingView, so I don't know. I use ShareScope personally because ShareScope has got really, really good analytical tools alongside charts, and I'm much more into the fundamentals when it comes down to the stocks rather than just the charting. You know, it's not quite as clear just to kind of look at a stock and you know, be able to get a technical level and buy low, sell high, because the problem with the stocks is they gap around a lot. So really kind of getting the fundamental outlook on the stocks is a lot more key than the charts. Yes, you pick levels, but you're not going to get a lovely flowing visual of price action, because you know they gap around a lot because they close. You know, every 4:30 every day UK time they close and they open up at 8. So there's a huge amount of time that those stocks can move, and you can't really get your moving averages and your you know, your momentum indicators to really behave in the same way. So not quite as not quite as easy to do that. So it's quite important to think about the fundamentals of those. And Disney is the other one, just incidentally as well. I really like the look of Disney. I think if Disney for a longer term play would be something that I wouldn't mind having in my basket, because they've got such a brilliant broad range of products, and obviously they've got their streaming system now going, which is probably going to manage to buoy their business, you know, keep their business afloat, and they're in much better shape than probably other companies for that. And then when things start to pick up in the world again, then they're going to, you know, enjoy again the theme parks opening up and being able to kind of make some profit that way. So yeah, Disney's another good play, and I think Disney's a good one for a little bit of medium term, but a great one for some longer term.
Okay, like it, Ash. Thank you very much. Julian, anything to add to that, or anything from you of your own stuff? Anything you want to add on Ash's thoughts?
Yeah, thanks, Paul. Yeah, look, I'm very sympathetic with Ash actually around individual stocks. I think this is a market of stocks rather than the stock market at the moment, and I think we're going to head in different directions. You know, I do not know what is going to outperform and underperform here without doing a heap of analysis, which I at the moment don't have the time to do. So I'll stay with indices. But for me, I think the next 2 or 3 weeks are going to be quite traumatic. I think there'll be days when it'll go nuts and in both directions, and it'll be very news driven. For me, I think the real key thing is what's going on elsewhere. So the bond market, since its initial rally on the back of the sell-off, has already backed up by about 50 basis points. So that means its yields have risen in some quite extraordinary way. The actual movements that are taking place in the long bond, it's moving 4 or 5% a day at the moment, which is unheard of for bond markets. So subsequently, I think there's a message going on there, which is that bonds aren't safe anymore. Gold isn't safe anymore. Oil, as we know, has been taken out and trashed and may well go lower. I'm very bullish on oil. I think it's going to go back up again. I'm just not sure the timing and from a cyclical point of view when that's going to happen. I think we've got the guys in Saudi and Russia. I don't quite know what's going on there. No, the lower oil price suits nobody apart from consumers. So I am mystified as to why the OPEC producing nations are behaving the way they are. They will come back to the party. They will get themselves sorted out. They don't want a recession because of oil in their domestic economies. You know, the Iranian government's already flaky as it is, and the Saudis have a especially unique set of problems, as do the Russians. So, look, you know, the big guys are really not comfortable with the oil price being down here. I think whatever's going on will last a reasonably short period of time, and you can see that from the term structure of oil. If you look at oil for delivery 6-9 months out, there's quite a significant contango in the market at the moment. Equally, you know, when we look at the bond market, my real comments there around what's going to happen, I think the bond market is actually being quite bright and thinking about the medium to longer term implications of all of this, and they are ones of inflation. Okay, so I expect to see the yield curve start to steepen. That means long-term yields. So how much it costs you to borrow money for 20 years is going to be more expensive than what it costs you to borrow money now. I think that yield curve is going to go positive, which I think, by the way, will be good for the economy, but also lead to a higher inflation rate. I'm very convinced that there is nobody right now who is going to do anything but raise their prices once there's a hint of this challenge being over that we're in at the moment. There's a lot of quasi-monopolies in the States and worldwide, and I think they're all going to raise prices to recover their loss of revenue as quickly as they can, and that'll be inflationary. I don't see it as being deflationary going forward. So maybe short term there'll be some issues, but in the medium to long term, I think that just means we're going to guarantee higher inflation, and all the governments are going to come in as they have done already and pump money into the system. You know, if you ever wanted a reason to get the governments inspired and get the catalyst of fiscal spending going, then you've just been given a 2x4 to the head. So this is where I see the markets heading in the next 3 to 6 months. So inflation's coming, just not this week or this month or maybe this quarter, but it's coming. It's going to come in a much more aggressive fashion. We've seen it in the past. Governments are going to be stimulative, and subsequent to that, I think there'll be a move that will be anti-US dollar as well too. So I think the European currencies as well as the Asian currencies are going to appreciate significantly against the dollar, but I just have no idea of timing on that because the world is still short of US dollars, but the US government will make sure that there's plenty of them around. So that's my basic themes that I've got going. How the hell we trade that, Paul, over the next 2 weeks is just anybody's game.
Yeah, look, it's one of the things, isn't it, where, you know, one of the things about this kind of stuff, actually, I mean, you know, just ask Justin to pop in and give his thoughts on some of this stuff as well, but we're talking about this. One thing I've been really pleased about inside the organization, the consistent message that's come out from throughout our entire team about how you do trade this. You drop your risk, you widen your stop loss, and you accept that you can have 1 or 2 losses trying to get to your win, because if you get your win here, it'll be bigger. And that if you do that generally, you'll stay around this market. And yes, you'll get on the wrong side of it and get knocked over, but low risk, wide stops, not too much damage done. And when you get one, you'll get a big move in your direction and you'll be pretty happy with it. Justin, you talked in the earlier show about some US dollar weakness. Very much your thought at this stage, right?
Hello. Hi, can you hear me?
Justin, welcome on board.
Hey, very nice to be here. So in the traders call just now, I was talking about really aggressive Fed stimulus. If you look at the amount of capacity that the Fed has to ease and to accommodate the economy. Its size is much bigger than what the Eurozone can do, and it's much bigger than what Canadians and like the UK can do. So in terms of that and their willingness to ease, we see that there's going to be a much bigger capacity for the Fed to work. And the earliest we're going to see that is in the next FOMC meeting tomorrow, not tomorrow, sorry, next week, where we're expecting at least another 50 pips of easing. So in terms of that, in terms of the economics of that, more easing means a weaker USD. And I completely agree with Julian that we're probably going to see strength in the Aussie, in the Euro, and probably the Canadian dollar as well. But Aussie and Kiwi are probably the ones that are going to strengthen the most. And also I think the numbers of coronavirus in China are slowing pretty significantly. I think we had a day with just like 5 new cases in the whole of China, which is pretty amazing. So I think in this part of the world, this coronavirus thing is starting to ease a little bit, and that should help the Aussie economies as well.
Nice. Cheers, Justin. Thank you for that. Guys, anyone, before we get to Jeff and get into some more technical stuff, anything any of you want to add at this point?
Nothing from here.
Any more, Julian?
No, I'm good. Let's go.
Oh, actually, one thing, really quickly. Netflix are offering a free subscription in Italy. So pretty clever move, I'd say, on from a business front.
Okay. I'm trying to work out why free. Why is free clever, Ash?
Well, if you sort of like think about what the tobacco companies used to do in Africa, they'd give people free cigarettes, get them hooked, and then they'd have a stream of people that were buying cigarettes, and that was how they managed to get people with a continued subscription. And I'd say it's probably the same model that they're doing with Netflix. They give people free subscriptions that haven't already taken up subscriptions anyway. And then when people get hooked on it, then all of a sudden the subscription ends, and people will probably, at least for a month or two, maybe even forget that they've subscribed to it, and then they'll get a pretty healthy bit of profit in their bank balance.
Actually, Ash, that's being duplicated by the cell phone companies as well too.
Oh, there you go. So yeah,
they're offering unlimited data at the moment for people who are working from home, and funnily enough, as soon as things settle down, people will forget to cancel their unlimited data, or they get used to it.
Yeah.
Okay, interesting stuff. Okay, anything else from you guys before we get to Jeff and get to some more technical stuff? Actually, Justin, just what I've got you, 155 pips on the euro for you this week. Did I read that?
I think it was 255.
255 pips. Gosh, you boys. Look, it is. It's a hell of a difference, isn't it? Is having full-time professional traders at the desk the whole day, trading the markets, what they can see and what they can do that the rest of us, aren't always there. Makes a difference. Great week for both you guys. I think it's been a strong week for Broadcast Scripts in the company. Nice to see it happening. Nice to see people who are subscribed and following along, making the money. That's what it's all about. At the end of the day, what we're really here to do is try and help people to make some money. Good to have the show so packed as well. We've got a chunk in the room on Zoom and a fair few on YouTube as well. Good to have your company. If you're new to us, welcome along. I do hope that you're hope that you're in and enjoying it. If you're on the ATW group, want to trade the SPX trade tomorrow, I've got a question on that. You definitely can. How about a short trade on volatility? Just quickly, guys, short vol.
Maybe I better have a quick chat on that one. I think shorting vol always makes sense when volatility is incredibly high. I think you had that chance on Thursday. I think it's gone. I'll be looking at that again when we have another significant down day.
Awesome. Cheers.
I have a big position on short vol.
You've got a big position, yeah. We talked about it a lot in the last few weeks, haven't we? The short vol play, how to do that, and I'm keen to get some charts. And Jeff, what do you got for us technically?
G'day, mate. Yeah, like I said earlier on, I'll take the screen here if I can. You'll have to stop sharing. Ash,
That's
I think.
Ash. Yeah.
Oh yeah, no problem.
So really, I suppose nothing's changed for me very much, except that I've gone to bigger timeframes to get my bias, my directional bias. And as I say, moving into the week in terms of fundamentals, I've got absolutely no idea what's going to happen with the currencies. Absolutely no idea, except that I'll use my charts and I'll go to the monthly chart first and have a look at that and say, well, okay, what's happening here? Where are we? Euro, I'd pretty much dismiss out of hand because of the two candles that are presented to me at the moment. One's going up with the tail, one's going down with the tail, and that doesn't suit me too much. But one thing that is interesting is we're back inside this little channel that we've been in for the longest time. And that probably gives me a little bearish outlook as we go into the week. And then I'll kind of just dig down into those smaller time frames and see if there's a reason to think that's the case. As I said with the euro earlier, I actually traded this down here and expected to get out of the trade maybe here, then again maybe here, then again maybe here. It just kept going. That's not a bad problem to have, of course. And I finished up at the end of last week, not last week, the week before, tightening my stops right up because I could see that this was now at a very, very strong level and had been through a very strong level and would have to really retrace at the least to here. But again, we're going further than that. So I think that's a theme. And I'm more than happy if these major levels are broken, because I think once they're broken and hit the next resistance level, that's probably the time to think about going the other way. And if they set up for you, then happy days, you've got a nice little trade on your hands, because they are going, in my opinion, much further than I anticipated. As I said, I was looking for a profit of about 120 pips on this one, and it turned out to be 541, I think, when it actually took my stop.
Gosh, you guys are on a stellar run, aren't you? It's just insane.
Yeah, that was off a risk of 35 pips too, so that was pretty cool. That was like 15.5 to 1 on that trade. And you don't need too many of them, obviously, in a month to make your account look okay. So I'm pretty peeved, as I said, that I missed this coming back, because that was exactly my play. I was looking for that to happen, and it's now too late, of course. But I will be looking at this. If we come back to retest that channel again, then maybe there is something to trade towards the downside. But interesting that everyone seems to be telling me the dollar's going to weaken substantially. I, as I said, don't know. I really don't know, because everybody is doing the same thing. I take Justin's point that the US have got far more to move on that, and I guess they will move, and maybe that gives them. I don't know. I really don't know, but I'll watch the charts. Aussie, look, exactly the same thing here. And what I'd really like to see early in the week with the Aussie is that it takes out these lows, because then I think there's going to be a trade towards the upside, and I'll be targeting this trend line, I suppose, or even back to this level that we're currently precariously poised at, which is pretty scary for the Aussie. 61 cents. I know it's been lower than that before, and I also know that they've been predicting 50 cents for the longest time. I don't subscribe to that theory, and I think my bias on the Aussie, which has been very, very bearish for the longest time, has now got to a point, and I'll give you a reason for that, apart from the technical reason that we are at a major support level, is I think the Aussie was under a whole lot of pressure before coronavirus, but when coronavirus hit, it was deemed that, and certainly I went along with this, it was deemed that China would bring the Aussie dollar to its knees because of the trade situation, obviously, that we have with China, major trading partner, well, the major trading partner. And I think now the rest of the world has actually caught up to that. So I don't think that's any longer a play. And yes, we've still had bushfires, we've still had floods, we've still had dreadful numbers coming out. It seems week in, week out, but I think that's all now been traded, and I think the insurance money that's now going to come back into Australia, if there's any left, that is, the insurance money that's going to come back into Australia now is going to help with all of that. The stimulus packages, obviously, from the government are going to be exactly the same as they are for every other government. So I think we're back on a level playing field to a certain degree. And for that reason, I think the Aussie is going to be a buy very soon. Now, where that happens, when it happens, yeah, great question. But of course, we'll be looking for this double bottom to come into play, or we'll be looking even for a lower low and then a retrace and then a higher low, and then we can start thinking about going the opposite direction. To trade it now would be extremely risky, in my humble opinion, but that's my thought process going into that. And because we are at this strong horizontal level, yeah, that's where I'm at with the Aussie. Kiwi is not too much different. I don't think the level is as strong, but gee whiz, it's in trouble if it gets through here, isn't it? It's down to 50 cents in a heartbeat. Well, not a heartbeat, but that's what that's the fear, I would imagine, if the Kiwi does break through this level, which is what, 59, 56, let's call it 60. If it gets through 60, then there's going to be a bit of a worrying situation going on there. So I subscribe to the theory that it will bounce here, and because we are at this strong level, maybe we do get to 60. Maybe we have a look at 60 again, and then look for that higher low and trade it long. I'm only looking at monthly and weekly charts at the moment to get that idea, to that theme that I'm playing along with. Although the markets have been absolutely crazy and in many regards one directional, I think that may well change based on the horizontal levels and the support and resistance levels, be they horizontal, be they rectangles, be they triangle, whatever they are. I think if they're in a longer term situation, as is this one, then there's every good reason to think there's going to be an opportunity to trade them. Pound cable itself on the monthly chart has got a little bit to go maybe before it hits these big time lows. And if it does, I'll be looking to either trade off the bottom here or let it slip through the bottom, then come back, false break to the bottom side, higher lows. It's going to be exactly the same on every single chart. Dollar CAD, CAD and oil, the combination or the correlation of those two makes it really difficult to be thinking anything CAD long, anything CAD short at the moment. But I'm kind of with Justin there as well. I think this will turn around at some stage, but whether it can withstand the pressure on oil is really, really difficult. So I'm probably steering clear of that one. I don't think it's at the all-time level, but by gee, it's pretty close to it. So again, if we snuck back inside here and put in a lower high, I'd start to get interested. So really, mate, it's the same. Every single thing's the same. I guess one point I do want to make is that those levels for me don't have to be horizontal. They can be trend lines. We've snuck through this one. This trend line started in 2008. We all know what happened as a result of 2008-9. Clawed our way back to there. And I can't remember what happened in 2015. Oh, that would be Brexit happening through there, one would think. So, yeah, major events have caused these things, you know, crash. Where are we now? We've got another crash on our hands, perhaps. Coronavirus. These are major events happening here. And it wouldn't surprise me in the least to see this turn around as well. So, yeah, the theme's pretty clear for me, mate. It's just a matter of recognizing where we are in terms of the bigger picture. And if we get an opportunity to trade that bigger picture, that's what I'll be doing. So support and resistance on bigger time frames is my theme for the week. And I may be on the sidelines for quite some time waiting for these setups, but I think if they do come, they should be fruitful.
Cool, mate. That sounds really cool. Look, I was going to talk about horizontal levels, and I'll just say this really, really quickly in simple terms for everybody that's listening. For me, support and resistance if you've got a horizontal level, be it really a pivot or a horizontal level or a fib, a strong fib, then when the market approaches it on any normal day, it will bounce. It's not that it might bounce, but on some time frame, if it's coming down at horizontal level, they will be buying. And you know, it always, in my view, always, and I don't use words always very often in trading, but you know, you've got a very strong probability of bounce. But I think news takes that away. I don't think a horizontal level, and particularly the closest horizontal level, matters during news. Big news will go straight through it, and sometimes it'll go to the next level or the level after that and stop there. And so it'll tend to stop at something always. But I think when you're looking at some of these levels for your stop losses, you need to remember that things that, you know, it will always, in my view, outside of news, these levels always create a bounce for us. And even if it's only a small bounce, I'm not saying that every bounce is, you know, 500-600 pips in it, but it's a bounce of some kind. But news will push you straight through, and you need to be aware of that. Look, I'm going to give the guys a chance to open up again. Anything from you guys to throw into the middle before we wind it up for today?
They've all gone home.
I don't think they have. I'm just trying to, you know, I'm still working out this Zoom thing.
No, I'm still here. Nothing from me.
Nothing from you, mate?
I don't think I've got a lot to add either, guys. I'm sorry, I've sort of said my piece. And actually, by the way, Jeff, agree with you 100%. This is about technical levels from here on in and seeing how things trade when they get there. And I think that's going to be where the real money's made. And actually, you're right. I'm not a great fan of trend lines this time around in this type of markets. I think they make perfect sense. And also, actually, I just want to echo what Paul said earlier, which is keep the risk tight and try not to be the first buyer or the first seller. Look for that higher low or higher high to actually give you the confidence that somebody else is there with you.
Look, guys, inside the show, we're not going to tell you what to buy and sell on a Monday morning, but you know, at any stage, what we are going to try and do is give you our opinions on the general directions of markets and what stuff that's going to come up, and let you guys make some decisions. At the end of the day, if you can take the opinions of the professional team we have coming and share in this and put them to use during the week, they'll help your trading, but really only you can put them to use. And we try and present them in a way that they make sense to different levels of traders. And if you're brand new and this doesn't make some sense, then watch a few more shows and you'll start to get used to the terms and it'll get a bit clearer for you guys. But you know, I really encourage you to try and take the general directions and the general terms that our guys have used and put them to use this week.
One more trade from me, Paul. I should have taken far more notice of. I've got a van full of toilet paper to deliver tomorrow. I'm getting orders from all over the mainland for toilet paper. I never thought I would ever say that in my entire life, but there you go.
Jeff, you're a bamboo farmer. Why do you have toilet paper?
Bamboo toilet paper.
Do you make it?
No. The wonderful people, I think it's actually made in China these days, but the wonderful people called Who Gives a Crap are now distributing their idea, which is Who Gives a Crap. That's their brand, all over the world.
What a name.
It's not bad, is it? So I try to sell lots of things that are made of bamboo. But as I said, I never thought I would ever say that. But my van is loaded with bamboo toilet paper right now, ready to deliver tomorrow.
Why are people really buying toilet paper as much for use as toilet paper as for tissues if you're sick? So yeah, you blow your nose into it, you throw it away.
Yeah, cheap tissues.
And it's more hygienic, so it's cheap tissues, right? It's about both, isn't it? It's why the big run. No, it's not quite as weird as it sounds when people say they're stockpiling toilet paper. Guys, don't stockpile stuff. We'll be okay.
Yeah, exactly.
We're a long way short of you know, this is I think this is a more major event than people generally think it is. And even I think that we're going to get to the end of it. It's going to be okay. It's not going to be okay next week or anything, but it's going to be okay. And it's actually really nice to see some governments who have been poor in their response step up this week. Both New Zealand and Australia, in my view, have done nowhere near enough, and this week they have done enough. And good on them. You know, it's some credit to them if they could paint in the gaps and explain what they've done to some people. Well, that would be good. But you know, we need to. Yep.
There is a point that we should have really discussed a little bit more in the show today, and I guess in a roundabout way we have. all of these cancelled events that are now prolific all over the world, you know, including English Premier Leagues, including, you know, the biggest things that ever happen. We've got to be starting to think the Olympics won't be happening, although Shinzo Abe is definite that it will. How does he know? I've got no idea. But they're going to ruin economies. But is that, if this goes on, of course, is that a race to the bottom for everybody? And how do we deal with that?
I think, first of all, Jeff, you've got to understand that, you know, really and truly events are a very small part of economies. We may see some things that we're not very comfortable with. We may see, you know, in our part of the world, we might see rugby league or a number of rugby league clubs go to the wall. Same with rugby union, we may lose a few.
Sorry, that was just an example. I mean, you know, flights, you know, yourself.
Oh, we're going to see airlines go to the wall. You know, I personally think we're going to see a bit of this kind of stuff. Well, let's be fair, Jeff. We're talking about this earlier on in the other show, mate. That, you know, one thing that, and I think this is really more Julian and Justin's area, really, but central governments have come out and just said, we're going to do what we need to do. We will do whatever we need to do here. You know, we've got reserve banks cutting interest rates across the planet. We've got fiscal stimulus coming to markets in large amounts, and this is trying to offset this. And I don't think we're going to be offsetting it completely, but I don't think we'll be offsetting it half. But they're going to try and cushion the landing here for us, Jeff. They're going to try and throw enough money at the world to keep people spending money and doing stuff and other things. And I guess one of the things that that I'll point out is, you know, again, I'm more of a chart expert than this kind of stuff, but you know, there's been a lot of talk for 11 years now about the stock markets going up on cheap money, and it just appears like there's going to be a lot of cheap money hit the world in the next 2 or 3 weeks, and some people will find a way to that'll be used to either boost the profits of companies, or for people to buy and trade those companies and push their values up. So it does support the fact that you know, I think we're likely to see, you know, this at least cushioned, and you know, we shouldn't forget that we've got you know, Donald and others going to election this year, and they can't afford to be seen to be inactive when we're heading, you know, to election year and heading to recession potentially. I don't know.
Yes, times like this, I should have paid more attention in economics at high school.
Do you know what though? From adversity comes opportunity, and I think this is where trying to get a little bit more minutiae, you know, getting a little bit more detailed on what you believe is going to be the beneficiary of this stuff is really the way to play it. I'm not really of the same school of thought that I think that, you know, everything will be back to normal and we'll see indices rise and everything else. I think there's going to be certain sectors that are going to do really well and certain sectors that are going to do really badly. You know, we've already seen the fact that Italy has actually improved some of the air pollution by locking down some of their cities. So there will be things that actually do really well out of this, and I think it's really the trick with this is finding the things that are going to do well and looking away from the things that aren't going to do so well. I think this could be a genuine fundamental change in how economies function. And I think the opportunities lie in trying to find the specific sectors and companies that will do well out of this.
Ash, I completely agree with you on that. I'm a huge fan of the electricity industry anyway, for obvious reasons, because that's the area I work in. But equally, I think there's a shift taking place, and the move towards renewable energy and electric cars is going to be a colossal growth area. I have no idea how you invest in that over the next 2 to 3 years, but I guarantee you those guys will not be having a recession.
Oh, look at a company called JB Motors. They are well and truly, they are my big star play on my watch list right now. JB Motors test for self-driving cars, and they've got software where they don't have to use the roads for their testing. They can actually do it in-house, so they're going to be providing a lot of the car industry pretty soon. So look at those guys for a pretty good play as well. But I think you're right. You know, there's going to be a few of these companies. We just need to mine in and see where the opportunities lie.
Yeah, look, and I think I'm a little bit more bullish on the overall market maybe than you are. I am conscious that this is an election year in the US, and traditionally they are going to throw everything at it. If I was Trump, I'd be doing exactly that. He's said his stall out has been the guy that's lifted the S&P single-handedly. It's only, I think, 18% up now since when he came to power. But single-handedly, he's obviously managed to secure an amazing American recovery from the GFC, and he's very proud of that, despite the fact he's obviously spending $1 trillion a year to get there. I don't think he's at all concerned about that. He's never worried about debt ever. I think he'll spend $2 trillion if that's what it takes to get the economy back on its feet again. So I am very relaxed about the US economy. I think it'll bounce back fast whenever it does bounce back. Yes, without a shadow of a doubt, Ash, I think you've got to pick your battles out there. There are going to be some industries. I'm not sure this is the right time to be buying airlines. And there may be a time to buy airlines, but not this week. And not for quite some time. And there'll be other industries as well too. Like, I was looking at cruise lines, and the yields on some of those cruise ships, those like Norwegian cruises and Royal Caribbean, are unreal right now. They're in the teens, some of those yields. So that's all very well, but of course they're not going to make any money for the next 18 months, and they might even go out of business. There'll be some consolidation. But again, there may be opportunities, right? And that may be something that's worth looking at, but it isn't worth looking at it this week. It's when things start to even hint that they may be starting to get better. I think that those type of plays will work out. But they are high risk. I think some of the industries which are recession proof right now will be the growth sectors going forward. And they're the ones, as Ash has pointed out, to be really focused on. But look, there is an argument for the overall market here. I don't know where it's going to bottom, or we'll miss it, because we will miss the bottom, because that would be weird if we caught bottoms. But we will miss it. We'll hopefully get in somewhere near that point in time in the equity markets, and there'll be some great buying opportunities coming up over the next 2 to 3 months. But I think the overall market is going to rally back a little bit from this. I don't think we're going back to all-time highs, though. The speed and acceleration of this decline, if you look at any of the history books, will tell you that the stock market's done. And it's done now for the next 5 to 7 years. The question is how it spins out onto the downside, right? And that's really what this is about. And to Ash's point, where you pick your fights.
Cheers, guys. Look, I think one of the messages that comes out of this, guys, is there were no rush here. One thing that's coming is opportunity. If this is going down or this is going up, there's plenty of opportunity, there's plenty of volatility, and it's not stopping next week. We've got plenty of time to make our money. Get your risk right. Pull it back, get your stop losses out, take your time. If you get 1 or 2 losses trying to get in the market, just stay calm and make more good decisions, and don't rush. There is no need to rush here.
100%, Paul. Look, there's as many opportunities in the foreign exchange market on some of the crosses as there are in individual stocks, and then possibly some of the other asset markets as well too. My favorite coffee market, I think, is about to start taking off again. So there's lots of opportunities out there, and some of those FX crosses we talked about, the Aussie Kiwi. Did we mention Euro Sterling in this chat as well too? Trading at 90
earlier, yeah.
That's absolutely insane. I don't understand that at all from a fundamental perspective. It's just where it is from a technical, emotion-driven rally, and that should come back. I think that's incredibly cheap or expensive in terms of euro terms, cheap in terms of sterling terms. But boy, oh boy, you're looking at daily movements, which are 75, 80 pips, right? You've got to be really cool with the risk, if not more than that. You've got to be really cool with the risk and try and pick your fights, and don't be the first person to sell that.
Yeah, agree with that too.
Look, guys, join us next week. We've got Ash and Jeff in for their show, 5 to 4 p.m. Singapore, Monday, Tuesday, Wednesday, Thursday. We're back on the that's Singapore time. We're back on the original show at 4:15 next Sunday. Lots of other stuff. If you're with Actions to Wealth team, Paul Hutton's doing his Wave Rider summary for you guys tonight. We've got the extra service. If you have any questions, webinar with Willie Tail on Monday night. So there's just lots and lots of stuff coming up. Make sure you get involved. Make sure you stay in front of the charts. Make sure you keep loving trading, because that is the way forward. To those that joined us today, thanks for you that joined us as guests, and particularly thank you to Jeff, Ash, and Julian for joining us as our experts, and Justin for making a special trip in as well. Do appreciate that. Great to have you guys' company today. We're back to do it again next week. In the meantime, guys, trade well, make good decisions. S&P's on for Monday morning if you want it. You can take the S&P on Monday morning. Look, it's a strategy we give out as is, and you're more than happy to see you guys in it on Monday. Keep your risk under control on that, like anything else. Cheers, guys. Thanks for the thank yous. Oh, nice comments, guys. Thanks for having coming in. Do appreciate it. That's always a pleasure, guys. Okay, cheers, guys. Have a great night, and thank you very much.
Happy days. Have a good week.